Welcome to Broker Playbook. My name's Christina Harms-Heike. I'm a certified reverse mortgage professional, and I'm excited to share with you today all about reverse mortgages. This is a very complex topic, but it's a very, very needed type of information and type of loan. So I'm excited to go over that with you today. All right, so let's get started. I'm going to go over the basics, some demographics, which are really enlightening. It's one of the things that drew me to the type of loan. And then we're going to go into the details. What are the basics of the loan? Go into some examples and some stories of actual clients I've had. I'm also going to teach you how to get the attention of your realtor partners. Now, reverse is a topic they don't understand at all. They may think they do, but they don't. So you having that edge up is going to put you apart from the rest. They'll probably send you other kinds of loans, but this is going to get their attention. So let's dive in. The silver tsunami is coming. Are you reverse mortgage ready? Got my slides on my screen here, so let me get these up. Okay. The silver tsunami is coming. Are you guys reverse mortgage ready? Let's go over some numbers here. Really, really enlightening numbers. Had no idea myself until I really dove into reverse mortgages. But if you had to guess, how many people do you think every single day turn age 62? Would you have guessed it's 10,000? That's a lot of people turning 62 every day. Now, 62 is the minimum age you need to be to do the FHA kind of reverse mortgage. There's another kind. If you're friends with me on social media, you probably see me talking about age 60 a lot. That's a different kind of reverse mortgage. There are over 75 million boomers in America today. That's a lot of people. And the benefit of reverse mortgage is that 80% of these boomers are actually homeowners already. So reverse mortgage will fit perfectly for a large section of this demographic, of our population, really. If you had to take another guess, what percentage of home buyers do you think are age 60 plus? This one's a shocker. I didn't think this many people moved after they were age 60. 25%. That's 1 in 4 people, home buyers, need to know about this option. And currently, most of them don't. It's a fantastic option to buy a home with a reverse mortgage. We're going to teach you about it so you can teach people. Another part I want to go over is everyone always talks about millennials as the new up and coming generation. We've got to market to millennials. Well, millennials are a big section of the population. They've delayed in buying. We all know that. They're starting to now. But if you actually look at it, boomers are almost just as big. And the benefit to boomers is they already own the home. You're not having to work through a new education of home ownership. They already own the home. So a lot of this is refinance loans, but some of this is helping your realtor partners get a listing and a new purchase with a reverse mortgage purchase. A loan that is able to be done on a lot of situations where no other mortgage will fit. So it opens up a big section of the market for you. I don't mean to bring doom and gloom, but these numbers are important. They affect our loved ones, friends and family, and our clients. So let's go over them because it's important for you to know. The average American's retirement is 20 years. That's longer than any retiring generation had to retire for before them. With that, 34% have no retirement savings, 51% have no pension coverages, 62% of baby boomers don't have enough to retire on. The cost of living is rising rapidly. That's no news to anybody, but across the whole country. And 64% of Social Security makes up at least half of their income right now. Now, if you talk to financial planners, Social Security is supposed to only make up 1/3 of a retirement plan's income. 64% are making it in their entire income, which the maximum Social Security check is not that much. Most of the ones I see are lower than the max. It's a very bleak situation, but there is saving grace. Most of them have a lot of home equity. Let's talk about this too. Medicare planning. So people think that Medicare will just cover everything once you're in retirement, but the truth is it doesn't. I see a lot of medical collection debts, even with people who have Social Security. There's a lot of things that aren't covered. Now, the name of the game is preventing falls. If someone age 60 plus, or anyone really, but once you get into those older years, it's harder to recover from a fall. If you can prevent a fall, you will change the outcome of your entire retirement, not only financially, which a fall can be a big financial burden, but your health and your longevity and your vitality. One big fall can lead to a lot of complications and a downhill a downhill trend in your life. Preventing a fall is more possible when you live in the same home that you've known and loved. The way our brains work, the information is stored way back in the deep, deep parts of your brain you're not even conscious of how to get around your home. Now, an older brain is less likely to learn new layouts. I'm not going to get into the details. Some of you have seen in my other presentations, but my own grandfather died of big fall and complications after he moved into a new home, a new apartment in his case. I wish he could have done a reverse mortgage. It drives everything I do because I've seen in my own family how preventing a fall, keeping someone in their own home where they've known all the layouts can make the entire difference. So let's go into that so you can help everyone you know with this amazing option. Okay, I went into the falls. 1/3 of seniors have a fall every single year. That's a lot. Cost of falls is 30 billion. That's crazy. Avoiding falls again, financially and for your health and safety. It's just huge. And then 662,000 seniors were hospitalized for a fall just in 2010. The other part of this is as people age, people are living longer. One of the ways to keep costs of care down is by having in home care. And the numbers are surprising. I thought in home care was expensive, which it is, but compared to the other options, oh my goodness. So we're seeing it here on the screen. The only cost that's not as bad is adult health care, but that's not going to address most people's higher level of needs. So when we compare home health care, adult day care, that's the least expensive, but that's typically for Alzheimer's, dementia, that sort of thing, where they also have family caregiving at home. But of the other options, someone who needs a higher level of care, which more and more people will need as they live longer, home health care is actually the least costly, rather than an assisted living facility or a nursing home. So keeping people in their home and helping the home pay for that care is actually the best financial possible outcome, at least currently, unless those costs change. Now, I love HomeBot. A lot of you are probably fans of HomeBot as well. One thing that we all help everyone do in home ownership is build their equity so that when they retire, they have something to fall back on. Well, a reverse mortgage makes that possible. The number is staggering. 83% of the average homeowner in America's wealth at retirement age is made of home equity. If you look at this, think about financial planners. They're trying to help people retire based on 17% of their entire net worth. For a lot of people, that's not possible. For other people, it might be possible, but it's awful constrained. If we help people look at the entire picture, which financial planners do not do far and wide, there's a few that do, but in general, they stay away from the house. This is where we come in. We can help unlock that 83%. Not all of it, but the largest asset that they have can help play into the rest of their retirement. The other part of this is for you as the loan originator. There is a huge mindset shift you need to get clear before you can help your clients get clear. There's a big mindset shift. For our entire years working, we are accumulating. We're working to pay down the mortgage. We're working to increase our savings and retirement accounts so that when you do retire, you can retire comfortably on everything that you've built. But what we see is that people get so stuck in that accumulation mindset, they really struggle and fight decumulating and living on everything that they've earned. We see that the most in housing. there's a backstory to this. And if you're friends with me on social media, you'll see some of my posts as to why that's kind of the American mindset. But it's your job to help people come to terms with, okay, you have made an amazing accumulation. Now let's make it the best structure so you can live on it for as long as you need to and leave as much as possible to your heirs. A reverse mortgage done correctly and structured properly by a professional who knows what they're doing will address both today's cash flow needs, tomorrow's maybe medical care needs, and their legacy plans. It's not one or the other, as a lot of people think it is. A reverse mortgage is the missing puzzle piece. Retirement pensions are a thing of the past. Even when I see one today, which is rare, they're like $190, maybe $200 a month. Pensions are just gone. In other countries, they call the reverse mortgage the home pension plan. I wish we had that name in America, and I'll do my best to change this name over time in my career. But you may bring it up to your clients. It's simply a home pension plan. It's a beautiful way to look at it. Have you ever mentioned reverse mortgage to someone? You may have had this reaction, or maybe they were super polite and they didn't say anything, but they kind of had this in the back of their mind and didn't share that with you. This is common. I can teach you how to get over that. It's important you do. You have to understand the mindset. People think a reverse mortgage, oh my gosh, don't take my house. You've got to understand the product to be able to walk people through. That's not the case at all. And they're actually more in control than with their existing mortgage, with a reverse mortgage. Now, this is something we see that's really sad as well. You are the key for awareness. People get to retirement and typically a life event happens. We see adult children that need help, a grandchild that needs help, a medical bill, maybe the death of a spouse, maybe the falling of a business. We're seeing a lot of that right now. And people have always looked to the house, and they're out of equity in a lot of situations, or maybe they don't qualify for a mortgage, a regular mortgage. It's easier to qualify for a reverse mortgage because there's no mortgage payment we have to qualify for. Big misconception that you don't have to qualify at all. That's not true. You do, but it's just not as high of a bar. So you are the key for awareness so that people don't continue to refinance with a mortgage where they just take the cash out and then pay it right back in. That's a vicious cycle that in retirement people just can't overcome. My name is Christina Harms-Heike. I am a loan officer myself. I started as a regular traditional forward loan officer. I've also done real estate. I found my love in reverse mortgages and do this exclusively for the past 5 years. I'm also a CRMP, highest designation in reverse. This really separates people who know what they're doing from people who are dabbling. I started in my dad's office when I was 16 with regular mortgages, and I was also the youngest CRMP to ever earn the designation. I also helped build the reverse division for C2 Financial, the largest broker in the nation, for about 4 years. And then as of 2020, I stepped down so I could build my own branch and really be hands-on helping clients in a more meaningful way. And a little fun about me. This is me and my husband, Jonathan. We were married in St. Croix a couple of years ago, right before COVID hit, and it wouldn't have been an option. If we'd waited one more year, that wouldn't have been possible. So really look back, and I'm grateful for that. And I'm a surf coach, and I roped him in to be a surf coach with me. This is a picture of my first year as a surf coach. As of 2019, the last season that happened, we had 40 girls on our surf team. So I really like educating, I like leading, I like coaching, and all of those skills are needed in reverse. If you have those skills as well, you may look at reverse as a good career opportunity for you. Certified reverse mortgage professional. This designation is no joke. It was very hard to earn. You will hear certifications with different companies. C2, we actually created a certification. That was a bare minimum of loan knowledge. It's about 40 hours of just product knowledge. This is different. This is really I guess it's kind of like the certified financial planner designation. You could be a financial planner, but then it's that extra level to get the certification. This is that. The test was a beast. There's only 168 of us nationally. I've mentored and trained over 200 loan officers to learn reverse mortgage. Now I'm talking about forward loan officers to learn reverse mortgages. So in this, you will hear different terms. I try to translate forward mortgages to reverse mortgages. They're very, very different. So hang with me if some of it's confusing. Traditional mortgages were never meant for retirement years. They're 30 years, so typically people should be having them completely paid off at closing. But as we've all seen, refinance, 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 that's not the case. Or changing homes. People change homes much more commonly than they used to. So that's a new set of a 30-year term on a mortgage, which is great for flexibility. But when we get to retirement, it makes it a little bit tougher. So traditional mortgages lock the money and the equity away in the walls of the home. When we get to retirement, people are literally taking their retirement accounts or income, social security check, and feeding it into the walls of their house. And then they can't access it back, and then they can't access it back in the time that they need it. Excuse me. I'm getting excited. I talk really fast when I'm all excited. Let me take a sip of water. So you probably see this in your client base. Seniors will come to you to refinance because they need to cash out. They need money. They can't afford general things and they can't afford that mortgage payment. So let's get some cash out so I can pay the mortgage. Well, it's a cycle, right? As we said before, you're pulling the cash out just to feed it right back in. And at the end, when that cash is gone, you've got to refinance now a much larger loan amount. And typically, if it is that much larger, if there's not enough equity, at that point now they can't do a reverse mortgage. So that's a situation I really want to get clear and hopefully help you get awareness out. When somebody over age 60 is looking to do a cash out refinance, maybe have them look at a reverse mortgage too, because we can get them the cash without forcing them to pay every month and put that money back into the house. They, of course, can. You can make payments if you want. But they're not forced to. There's a big difference there. Why not a HELOC? This one drives me crazy. Lots of reasons. HELOCs are not good for retirement age people. They're great for the rest of us. If you're working age and you can pay it off, borrow back, pay it off, that's fine. Fantastic. In retirement years, typically people are not increasing their income and not more able to afford a larger payment when that thing amortizes. Typically, they're looking to refinance again at that point. With the reverse, we can actually, with a reverse, we can actually structure in a line of credit. So compared to the HELOC, they don't compare at all. The reverse line of credit is much more suited for retirement years. HELOCs can be frozen, and they often are in the time when people need them the most. Your seniors are the matriarchs and the patriarchs of the family. When their kids and their grandkids come into trouble, like losing their job, they look to those seniors for money. And if they have a HELOC, those HELOCs are frozen at the time when their kids and grandkids are losing their jobs, when the market's down typically. A reverse mortgage line of credit cannot be frozen. No matter what happens to the market. The other part is many people exhaust their HELOC within 5 to 6 years, and then they're back in a bad spot. And refinance or cash out options are really only good for still working age people. I cannot stress that enough. They're really band-aid solutions for people in their retirement years. It's not a full remedy. It doesn't protect them for the whole life of however long they want to stay in that home. Whereas a reverse mortgage does, and it creates much more flexibility for whatever challenges they're going to face. And let me tell you, there are so many more challenges, life events that happen in retirement years. People are not prepared for them, and they never think it's going to be them. That's one of the sad parts I see in what I do. Another sad part is often people think, oh, I'll just do the reverse mortgage eventually when I have to. And if they've done HELOCs and cash out refinances, by the time they get to me, they're typically desperate and they typically aren't going to qualify. They don't have enough equity to be able to do a reverse mortgage. And that's why I stress look at a reverse mortgage too when that person comes to you. Because if they do the refinance, cash out, if they don't have enough equity when they get to me, that's a tough conversation. And unfortunately, I have a lot of those. Trying to change that. Now, reverse mortgages are very different. I was a forward loan officer, and I equate this to my USDA client. I had a client who wanted to buy USDA. We have a couple zip codes here in San Diego that qualify. So I grabbed my AE and I said, hey, send me the matrix, send me the guidelines. And I read my guidelines and I got that person through the USDA loan, even though it wasn't a loan I'd done before, got them through okay. Reverse mortgage is nothing like that. Do not think that you can get a matrix and a couple of guidelines and get through this client. No, no, no. That is going to be a horrible situation for you, a terrible experience, and for your client. And worse, you will not know enough to structure to be able to help them with their cash flow now and protect their longer term equity. There's a lot of education that you need to have before you ever talk to anybody about a reverse mortgage. And I also really highly recommend pairing with a mentor. That's how I got to where I am. And I built the mentor program at C2 to offer the same. Some of the best reverse mortgage loan officers I know now went through the mentor program so that every client they had was well protected and they got good reviews from day one. So let's go into some differences. I get a lot of questions. What's the LTV? We don't have LTVs. That's not how it works. We have principal limit factors and they change with rates and they change with age. Bonus points for living longer. There's larger loan amounts at higher ages. So somebody in their 60s cannot borrow as much as somebody in their 70s, who can't borrow as much as somebody in their 80s. But don't wait till you're older because rates have a much bigger impact on loan amount than age does. ARMs, in forward mortgages, people usually shy away. In reverse, it's like 90% of loans done. Heck yes. Reverse Vision is our LOS, totally different software. We don't use Point, Compass, and Calyx, Lion. I don't know if I'm listing them all. I don't use them anymore. But we have totally different software that you need to learn as well. It's not intuitive by any means. FHA condo approval, yes, no, depends. If it's a condo, sometimes we can do it on a different type of reverse mortgage. If you want the FHA product, it has to be FHA approved. You can help your borrower get it FHA approved. Income and credit qualifying, yes, but it's easier than other types of mortgages, again, because there's no mortgage payment to have to qualify to. And if you know what you're doing, you're going to be able to help people with compensating factors and extenuating circumstances. Sorry, I got a little recording notice. Meetings coming up. So yes, but I've only had a few people in my career I couldn't get qualified. And the people that couldn't get qualified, those are good situations to help advise them that it's just too big of a house. It's too expensive for the rest of their finances. And the reverse mortgage isn't a solution because you have to make sure they can pay their expenses, their property taxes, their homeowner's insurance, HOA, keep the lights on, keep food on the table. If they can't, that's not a solution. You don't want to get that person into a reverse mortgage. You want to help them downsize with a reverse purchase instead. We're going to learn about that here. Impounds, no, but we do have something called the LISA. Again, training. I can't get into everything here. You, as the loan officer, will actually get the 100+ page loan app signed. In some situations, it has to be wet signed. We don't have e-disclosures sent out by the lender. It's a very different process. What's the minimum FICO? Well, FICO kind of doesn't matter sometimes. Sometimes it does. There's no minimum FICO unless it's a very specific type of reverse mortgage. Sometimes the jumbos have a minimum. But in FHA reverse, I've had clients who didn't even have a FICO get through. If it's a purchase, you do have to have a FICO. Credit history here matters. FICO score itself typically doesn't. Are you confused yet? There's a lot to this loan. Hang with me. Let's go through some of the basics. The other part of this is a reverse mortgage loan officer. Like any other loan officer, especially us brokers, we are meant to advise. We are helping people advise to make sure they're in the right structure for their situation, with the right loan, with the right company, with the right rates. That's what we take pride in. If you're trying to do a reverse mortgage without having the knowledge to do so, you're not advising. This is not just a mortgage. You need accurate, up-to-date information so they can reach their retirement dreams and goals. I believe it's reckless as a mortgage advisor to attempt to do a reverse mortgage without having that knowledge. And there's an organization, the NRMLA, National Reverse Mortgage Lenders Association. I'm a member. One of the code of ethics that I subscribe to is to not let someone who's incompetent attempt to do a reverse mortgage. And unfortunately, there's so much to this loan. It takes a lot of training to get there. Again, use a mentor. I really, really highly suggest you pair up with somebody who knows what they're doing to help you through your first loans, even while going through your training. Most of the lenders offer training online. Now, this is typically the last loan that you will put your borrower in. So again, here, you are helping now for today's cash flow. Maybe they've got cash flow needs from now until they pass away, and for their legacy concerns. If you don't structure this right, you could be hurting their heirs' inheritance when you never needed to. You can meet both if you structure it right. And they will typically need to live on this the rest of their lives. So you need to advise properly for this. For example, you can structure monthly payments for a certain number of years or for as long as they live in the home. Now, if it's my grandmother, and who knows how long she might live, I want it to be as every month a deposit for as long as she lives in that home. Because what if I do 10 years because it's a higher amount, but she outlives that? So really analyzing the situation. You have the opportunity to become the advisor in reverse like nowhere else. It's a huge opportunity, but you've got to know your stuff. You've got to put in the work. This is just an example. Bob did a cash out. He refinanced 3 different times because he kept needing that cash to pay the mortgage back and other expenses. By the time he got to me, he couldn't do a reverse mortgage. He didn't have enough equity. I told him he needed to bring in about $50,000 to help pay down his mortgage to do the reverse. He didn't have it. He had to sell his home that he dreamed of living in for the rest of his life. Please don't put people in that situation. That's a hard conversation I have regularly, like I said. And I can look back in the mortgage history and see all of the opportunities that a mortgage loan officer did not bring up a reverse. And we need to change that going forward. There's just too many boomers that we can't let this happen to. Reverse mortgages. These are some of the things I hear from people and loan officers. I'm in a unique situation. I get to work with a lot of forward loan officers and with clients themselves. So here's what I see in the 2 arenas. It's interesting what's going on behind the scenes. People will say to me, well, we started with someone else, but something just seemed off, like he wasn't explaining everything. He just kept calling and pressuring us to hurry up. Or she was sweet, but she couldn't answer our questions. Now I hear from loan officers all the time, this is literally the slowest client I've ever had. I'm tired of chasing them. They just stopped answering my calls. I don't know what happened. Her son wouldn't let her move forward. The neighbor told them reverse mortgages are bad. Those are all quotes from real loan officers. Now, I understand what's going on for the loan officer and for the clients and how to pair that up. The basic answer is education. The larger answer is the client psychology is entirely different. You've got to address them differently, a lot more patience. So successful reverse mortgage loan officers have a lot of patience. They enjoy teaching. There's so much education to this process. They're very ethical and understanding and caring. If you wouldn't put this structure for your own grandparent, don't do it. That's a guiding principle for everything I do and everything I see good reverse loan officers do. Treat it like it's your own grandparent. You have a high capacity printer. Like I said, it's about 300 pages each time I do an application. You have to leave a borrower copy. We're a lot more paper. We use snail mail and phone calls. A lot of our clients don't use email, and it's not a good idea to try to stress them out and force them to use email. You pivot, accommodate to whatever technology level they're at. Remember, the last time they did a mortgage may have been 20 or 30 years ago. They used fax machines. I have a fax line. I got it recently because I needed it. They did mail. So you can pivot to whatever their needs are rather than trying to force them into the way you do business. Good reverse mortgage loan officers can handle and hold emotional space. You're not reactionary, and you don't try to solve all of their problems. You help with the mortgage and be an ear to listen. We go to the clients' homes and sort through documents with them. I can't tell you how many times I've done that. A good reverse loan officer doesn't price like an idiot. If you are friends with me on Facebook, if you're not, please friend me. You'll see my stories and rants sometimes. But you don't price like an idiot, because if your quote ever gets into financial planners' hands or they compare you to somebody else and you don't know what you're doing, you're never going to get another referral, and they could ruin your reputation. So you've got to know what you're doing before you attempt to do a reverse and price it. And don't rely on your AE. They don't know. AEs are great, but they're not supposed to do your job for you. Goes the extra mile, of course. You enjoy helping people, even when you don't make a lot of money. Some of my hardest reverse mortgages have been because the client couldn't get help anywhere else. And I made the least I ever had on that loan, but it's super satisfying. Pause here. I think I have a cat to let out. Yeah. Go. Sorry, he's usually pretty good. Okay, next slide. Now, how long do you think the average reverse mortgage client takes from the first time they talk about a reverse to a loan officer till the time they actually apply? Well, that's 9 months. You've got to be patient. You've got to look for the long game. It takes a while to build up your business in reverse. Part of that decision is because there's a lot at stake. They've heard bad things. You have to gain their trust. You have to gain their trust in the product. A lot of the time you have to gain their family's trust. Okay, this is another amazing broker that we all know. Brokers are better. Michelle Dugan. I asked her, why don't you do reverse mortgages? And this is one thing that she said, and I respect it so much. Michelle said, I would rather hand it over to the pros than fumble through it myself, especially when it's for elderly borrowers. If I can't give them the best knowledge and service, I'd rather send it to someone who can. Now, this is to tell you, refer it until you know it. I get messages sometimes that people are trying their first reverse mortgage. What do I need to know, and how much am I going to get paid? Typically, that's not a great situation to try to learn reverse on. You're not doing your client any service. You're trying to pad your own pocket. But the truth is, you're probably not going to make enough on that loan to make that journey and that experience worthwhile. It's tough. Sometimes people have a good, easy one, and hats off to them. That's fantastic. But don't let it fool you. That's not the norm. Seniors are a protected class. We are watched very, very highly by FHA, by ARP. ARP's one of the biggest ones that watch what reverse mortgage does, by the CFPB, by NRMLA, by HUD. You have to know what you're doing and structure things properly so that you're not doing anything that's not right by the client. Also, protect your business. we're mostly referral based. You want to protect your reputation. You can only do that if you know what you're doing. Let's go into the product knowledge. 6 myths. This is where you want to take out your pen and paper and take notes. I've heard this from loan officers too, these myths being busted. The lender will own the home. Nope, not true. The truth is you actually retain full ownership. It's a mortgage just like any other mortgage. The reverse requires monthly mortgage payments. I don't know where this one comes from, but it's not true. Now, you do have to make your property tax, homeowner's insurance, and any HOA payments. Those are typically on the borrower. Again, I mentioned there is a way to have around that, but that's not common. Most files are not going to have that LISA we talk about. So typically they're going to have to pay those themselves, but they don't have to make a mortgage payment. Now they can if they want to, but they don't have to. The reverse mortgage must be paid back after 30 years or when the youngest borrower turns 100. That one's not true at all. There's no term on a reverse mortgage. It can be due to be repaid at events instead of a certain timeline. We call these maturity events, and there are 3. 1, when you sell the home, you can sell at any time. It's a mortgage just like any other mortgage. Pay off the mortgage when they sell. When, number 2, the last borrower passes away or moves out of the home permanently. Now, typically in that last one, it's a higher level of care being needed. And most of the time, the family is looking to get the rest of the equity out of the property so they can pay for wherever that higher level of care is. So those are the 3 events. When it's no longer a primary residence, pretty much is how you can interpret that. A reverse mortgage has to be a primary residence for the whole time you have the mortgage. So this cannot be done on rentals, can't be done on second homes, can't be done on investment properties. Of course, like any other mortgage, if they default on property taxes and insurance, that's a due and payable event. But that's true of any mortgage. I hope you guys are all informing all of your borrowers on that one. Myth 4, to qualify, the house must be debt-free or paid off free and clear. Not true at all. About more than half, probably about 75% of the reverse mortgages I do, we're helping somebody pay off their existing mortgage so they don't have a mortgage payment. And then in addition, they can get some funds, monthly payment, line of credit, lump sum. But the house does not have to be free and clear. You just have to have enough equity. Myth 5, there will be nothing left for heirs. The reverse takes all the equity. Not true at all, especially at today's low interest rates. Even if they never make a payment, because of appreciation, most of the projections I'm seeing at 2.5% interest rates, most of them are showing increasing equity, even with never making a payment, which is just phenomenal. Now that will change when rates go up. But even when rates were higher, we would see increasing equity for like 15, 20, 25 years. So it's not either or. Now, if you're in a market where there is no appreciation, that statement can change. So know your appreciation for your markets before you go into reverse mortgages, or look them up as you go. Number 6, with a reverse, I can't ever sell or refinance. Not true at all. It's just a mortgage, which is a lien on title. You can still sell and you can still refinance at any point. The caveat here is sometimes people have a hard time refinancing because they just don't have the income. Seniors on fixed income, a lot of the time aren't going to qualify for a mortgage that requires a payment. So while they can, a lot of the time reverse mortgage, people aren't going to actually qualify to be able to do that. But if they qualify, of course, they can refinance it. Misconception, access to some of the equity, not all of it. In your mind, I want you to think about 50%, but the truth is if they're older and rates are low, they can get near 60, maybe 70% LTV. Again, we don't use those words here, but I'm relaying it for forward. But think 50%-ish. If it's near 50%, we should look at it. So who is a reverse mortgage for? Homeowners age 60 plus with enough equity. About 90% of boomers say they would like to remain in their home as they age, and a reverse mortgage can help insure against longevity. and the risk that you might live much longer than you're expecting to and outlive other assets. You're going to keep that roof over your head with the reverse mortgage. Eligibility. Here's the basics. There's different types of reverse mortgages. There's the FHA type, and then there's portfolio, there's jumbo, there's private types of reverse mortgages. So in general, at least one homeowner must be age 60 and over. You need at least around 50% equity. LTV goes up in age. So if you have a borrower who's in their 90s and they don't have 50% LTV, but maybe it's 70%, we should still look at it. Owner occupied for the entire life of the loan. 1 to 4 units may qualify if the homeowner lives in one and remains living in one. That's a great retirement strategy if they can manage the other rentals. Some manufactured homes, not all. Some condos, not all. Loan amounts up to $4 million. And we must account for all spouses. Unlike a regular mortgage where you can leave a spouse off, reverse mortgage you cannot. So you have to account for all spouses. No term. Pay the loan back when the last borrower or non-borrowing spouse. If you get into a non-borrowing spouse situation, really know your guidelines before talking to your client. Talk to your AE. But non-borrowing spouse is different in reverse. It has a whole bunch of guidelines you need to know. When the last borrower or non-borrowing spouse moves out of the home permanently, sells the home, defaults on property taxes or homeowners insurance. Today's reverse mortgages have new options. Also, today's reverse mortgages are different than reverse mortgages done in the past. Some of the bad rap you may have heard from come from old reverse mortgages and the way they were done. FHA has changed the rules over and over to make sure this is a safe, good, viable option today. So that, if you have to address that, that is one of the things, is the reverse mortgage has new protections and rules built in. The jumbo option, costs as low as $550. That's the cost of counseling and an appraisal. Rates from 2.99 all the way up to 7 and 1/8. Pay off current mortgage, must pay off all other liens. Lump sum, they can get lump sum as their cash. They can get monthly income. It's not typically income, like we don't say income, we say monthly deposits, but this still does. Line of credit options, and you can mix and match. And most of my clients do that. When I show them how they can tailor exactly what they want and need with the reverse mortgage, they typically choose that. They'll get some cash now as a lump sum. They'll take some as a monthly payment, leave the rest on a line of credit as a safety net. Again, higher level structuring there. You need to take your classes so you can do that. The non-FHA or jumbo reverse mortgages, there's no mortgage insurance. Rates are a little higher because of that. Really low closing costs. Condos don't need FHA approval. They will still have their own type of approval, but it's less stringent than the FHA one. 1 to 4 units can qualify, loan amounts up to $4 million, values up to $10 million. Why do people get reverse mortgages? Tons of reasons. I listed out my top 20 here. I'll read through a few of them. In most every situation, we're looking to balance today's cash flow with tomorrow's home equity. Pretty much across the board, everybody's trying to do that. Another reason, people are looking to benefit from their appreciation in real time rather than just waiting for it to add up and add up and add up, and they never benefit from it, but their heirs do. Looking to retire. Reverse mortgage can help people actually retire and bring those costs down so they can. Pay medical bills, pay off high interest credit card debt, increase cash flow, lower the tax bracket. That's higher level. You're going to want to do some research and reading on how to do that. Manage sequence of returns risk on their retirement accounts. If you work with a lot of financial planners, you want to look into that and understand that line there. Game changer. Financial planners don't really understand reverse mortgages, and yet they're asked about it all the time. If you're their resource, that can be a game changer for your business. To create a safety net, create a fund for long-term care, keep independence. That's a huge one. People do not want to become a burden on their family financially or for care. And the reverse can address both. Pause here and read through the rest of them if you're interested. I'm going to keep it short for time. Who needs this? People who should not be drawing from their retirement funds. The retirement funds need to sit so they can grow. If they're drawing them down, they're not going to grow. People have been told they can't retire, but want to or maybe need to. People wanting to balance their cash flow for longer term equity. That's most everybody. And the best fit is in markets where there is appreciation. Now, reverse mortgages are done across the country, not just markets with appreciation, but I like to be able to meet today's cash flow with tomorrow's longer term home equity for heirs. And you can do that when the market has appreciation much better than if the market has no appreciation. But you can still do the reverse and help them, definitely. Anyone who needs in-home care now, this is a really big thing looked to for whole families when mom won't leave the house and she needs higher level of care. And the kids are pooling together to pay for it, but it's a burden. So they look to the house to help pay for that. It's a very common situation. Anyone who wants a growing line of credit, again, higher level, do your education to learn about that. It's a fantastic feature. A little more complex. I can't get into all of it today, but the line of credit cannot be frozen. There's no term or draw period on it. So if they want that line of credit open for 20, 30, 40 years, draw, pay back, they can do that. They can turn it into monthly deposits down the road. That's fantastic. And it can be drawn, paid back, and drawn again for their whole retirement. Quick example. This is a past client of mine, Ed. Ed was 73. He owned a single family home in San Diego. It was worth $600,000. He had a mortgage of $110,000 plus a hero loan. We have to pay off all liens, so look for the hero loans. He wanted to do a cash out mortgage, but he couldn't qualify. So he was referred to me, as is common, and he just wanted to reduce his monthly expenses. That's why he was doing the cash out. He wanted to get the cash so he could actually cover his monthly expenses. His goal was to live in the home only for another 10 years. Wasn't looking to live there forever, but maybe he had a grandchild who, if they moved away, he wanted to go wherever they were going. This is a chart I create. You're not going to see this anywhere else. Got to go the extra mile in reverse, but this is a basic chart showing their options. I'm going to go through this briefly so you understand, but not everyone's situation will look like this, so don't get too tied to the numbers here. First off, we paid off all liens, so that mortgage plus the hero loan. Then Ed had options. If he did the fixed rate type of FHA HECM, home equity conversion mortgage, he had the option of taking a lump sum of $46,000 cash at closing. Now, that's the only option available within the fixed rate. So if that wasn't going to meet his needs, he also could do another type, which is the adjustable rate. So in the example here, you can see options B, C, and D, and they're all essentially the same underlying loan, but on the chart, it shows different options he has to take the proceeds. Option B is if Ed said, Christina, I only want a monthly payment to me every month for as long as I live in the home. I don't need cash now. I don't really need a line of credit, but I do need increased income. Well, with his numbers, we could get him $965 every month for as long as he lived in the home, even if he lived to be 110. Now, if instead he said, making that mortgage payment go away is enough. That helped my finances immensely. I don't need anything, but I might need something in the future. Let's leave it all on the line of credit. Well, that figure could have been $201,000 on a line of credit. FHA has a protection built in where you can only access a portion of it within that first year. And you can see that in the second box there, $58,000 within the first year. And then after that first year is over, he could take another $142,000 or leave it all there and let it grow. What Ed actually did was option D. We got him $30,000 cash at closing to pay off some credit cards and pay off the rest of his car and have a little in his savings account for immediate needs. He didn't want a monthly payment. Simply making that mortgage payment go away was enough. And then we left the rest on a line of credit. If he never uses that line of credit, it turns back into equity when he or his heirs sell. But it's there if he needs it. The numbers here are a little small, but I want to show Ed's plan was to sell at 10 years. That's when he thought his grandchild might move to another city and he would want to follow. So, as I said before, because of appreciation, equity increases even if he doesn't ever make a payment. And that's what we're showing here is that Ed's not making a payment for the whole time. And I have to go back. The example here. Oh, no, that's true. Sorry. Okay. So the 10 years out is highlighted, and the equity column, you can see in year one, his equity is 462,000. By year 10, when he thinks he's going to sell, his equity will have grown to 666,000. Not to mention all the money that he saved by not making a mortgage payment, leaving it in his retirement accounts and watching those grow too. So this is really what I wanted to show you, the balancing of today's cash flow and tomorrow's home equity. What if Ed didn't sell though? What if instead he decided to stay? And at year 15, when Ed was 87, suddenly he had some sort of medical event and needed some cash for medical bills or maybe in-home care. Well, he could look to his line of credit, which will have grown from about 200,000 to 343,000. Now, here I want to point out, if he looked to get a reverse mortgage at that age, that is not the line of credit he would be looking at, because as it increases in age, it's like less than 1% that becomes available. But this line of credit has been growing at like 3% every year. So that is huge. And that's the power of that line of credit within the reverse mortgage. And let's go a little further out, 20 years out, when Ed's 92, he'd have 409,000. Now he could call the reverse mortgage company and say, I need that as a monthly payment to pay my in-home care person. And they could tell him, okay, that's great. You can get this much every month for as long as you live in your home. We'll turn that on now if you want us to. Very, very simple, really flexible, meant for retirement years. And you can see that here, no matter what he chooses to do. Last thing I want to go over is to get your realtor's attention. 1/3 of baby boomers will relocate to a new state for their retirement. You need to be able to offer the reverse mortgage purchase loan. Let's go into Sue. I see this a lot because I'm in California, right? People actually leave California so they can cash out on their huge investment and buy somewhere for a lot less. This is a similar concept. She didn't move out of California, but she moved from a large house to a small house. So Sue downsized. She didn't have any other retirement assets. She was a widow. And she sold her home in Northern California for a little less than $1 million. She netted about 900,000 from that house. She moved down here to be near her grandkids, and she bought a condo for 600,000. But instead of using cash, which she had 900,000 cash. Instead of using 600,000 of that, we did the reverse mortgage for purchase loan, and she only used 300,000. So now Sue created a retirement account for herself of 600,000. We call this the retirement maker. It is one of my favorite things to structure for people. The whole time we talked to Sue, she kept going, what do you mean financial planner? We'd bring up, tell the financial planner how long you want to stay in this house and have him project your income. And she was like, well, I don't have a financial planner. I don't have a retirement account. We had to keep reminding her along the way, well, you're going to have a pretty big one. So let's get you hooked up with someone and coordinated so that you can enjoy the rest of your retirement. It's just a fantastic loan. So this was a great introduction, but you need way more education than I can give in this hour or even 4 hours. You need to take your classes offered with your reverse mortgage lender. I also have a free training group. Find me on Facebook, message me if you'd like into that. It's for brokers because we need more awareness. We need this to be a bigger option that loan officers themselves understand. I recommend a minimum of 40 hours with your lender classes before you even try to talk to anybody about a reverse mortgage. Do not take this webinar and go and grab a reverse mortgage and try to learn on that client. That is totally brutal on you and the client. And find a mentoring coach that you can work with on your reverse mortgage clients. The biggest thing is, are you willing to commit and dive in? Hopefully this has given you a broad overview so you can identify if this is for you or if it's not. Don't waste your time if it's not. If it is, dive in, get your education. This is going to be an amazing solution for so many people, but you can't take it lightly. The best solution, if you do take it lightly, is to just refer. Introduce the idea, then get them with an expert. If you want to dive in, you can also message me. I can hook you with a really good AE that can get you into the lender courses so you can start learning about reverse. All right. Thank you so much for attending. And I hope that you have learned a lot about reverse. And any questions you have, always feel free to message me. If you'd like into the training group, the more the merrier. We're just trying to get the word spread about reverse. Have a great day.